Hello, everyone, and welcome to Technology Tuesday, hosted by Out of the Box Technology. We are excited to bring you these free webinars every week featuring what's going on here at Out of the Box Technology, some of the services and solutions that we offer, as well as third-party apps, tips and tricks from in and outside of QuickBooks, and hot topics that our industry is encountering. My name is Jennifer, and I will be your moderator today. I work in business development here at Out of the Box Technology, and I'm happy to be the host each and every week on our Technology Tuesday presentations. If you have any questions as the presentation is going along, please feel free to send those over to me on your chat function on the GoToWebinar control panel, and I'll be able to answer those questions for you if it's about anything audio or tech or whatnot, or anything about Out of the Box Technology. If it's about the presentation that we're having today, send those over as well, and I'll be sure to share those during our question and answer time in the session. A little bit about Out of the Box Technology. We are a firm that deals with QuickBooks training, integration, hosting, and support. We have a whole team of consultants that are here to help with that. We also have a team of bookkeepers that offer some great services, and we have an IT development team that does website design, custom app development, data migrations, and a whole slew of franchise services and solutions. But today I'm really excited to welcome Avalara. I have Mark on the line with us, and Mark is going to take a look back at 2018. There was a lot of changes with sales tax. We all know about the Wayfair versus South Dakota Supreme Court ruling. We had a webinar on it last year. So Mark's going to talk with us about that, and then what's looking forward to 2019. So at this time, it's my pleasure to welcome you, Mark, and you can take it away.
Thanks, Jennifer, for the introduction. And first, just want to thank everyone at Out of the Box and Jennifer for inviting us to present to you today. And I'm just going to double check that my screen's being shared. It looks like it is. So
Yep.
We'll go ahead and get started. My name is Mark Ratcliffe. I'm a national sales manager here at Avalara. I've been with the company for about 4 years. And for folks that are not familiar with us, we've been around for about 15 years. We're headquartered in Seattle, Washington. I actually work in our Durham, North Carolina office. And we're currently the industry leader in sales tax compliance automation via the cloud. And we handle sales tax compliance here in the US, Canada, but all over the world as well. A lot of our customers will have challenges with VAT in Europe, for example. And we deal with compliance throughout the rest of the world as well. What we're going to talk about today, and Jennifer touched on a little bit, is some of the things that changed in the 2018 sales tax compliance landscape. And then we'll talk about how that's going to affect companies moving forward into 2019 and beyond. So this is just a short agenda of what we're going to talk about. I like to start, every webinar talking about sales tax compliance at a very high level. We're going to talk about why it's challenging and why usually technology is needed to make sure that it's being handled accurately. We will talk about significant changes to Nexus in 2018, specifically the Supreme Court decision related to South Dakota versus Wayfair. And we're going to talk about how that affects different types of companies moving forward. And then finally, we'll talk a little bit about what we do and how we can help automate that compliance process. And we'll leave maybe 10 or 15 minutes open at the end of the presentation so that we can go through some Q&A. So this is really one of my favorite slides. And as you can see, it's an iceberg. And this kind of represents how a lot of conversations will go with me when I'm first talking with a company or someone who's inquiring as to the complexities of sales tax. When you ask someone generally, what do you think of when you think of sales tax, the first thing they're going to say is typically a rate or some kind of percentage, right? They'll think about, well, I sell my products and services to my customers, and it's a certain percentage I have to charge. Or if you're the consumer, you're purchasing a product, and it's a percentage that you're going to pay in addition to the price of the product. But sales tax compliance, is a lot deeper and more complex. And our presentation's a little slow here, but there's a lot going on underneath the surface, right? Sales tax compliance goes well beyond just thinking about rates. And number one, we can start with a conversation around nexus. Now, for those of you who are not familiar with that term, it is an industry term. It means the obligation for your company to have to register in particular states and collect sales tax on your sales into that state, and then remit the tax and file a sales tax return with the state. And nexus, as some of you are probably already aware, determining where your company has nexus has become more complex since the Supreme Court ruling last summer. And we're going to get into that in a little bit more detail later on in the presentation. But there are a vast number of ways that companies can create nexus in states across the United States. Primarily things like having a physical presence in another state. But also, as we'll talk about in a little bit, now just crossing certain types of thresholds from a total sales perspective or a number of transactions perspective can trigger nexus. But nexus is really thinking about the number of states in the US currently where you're obligated to be collecting and filing sales tax. Number two on the list is product taxability, right? A lot of companies that we talk to will sell a tangible item, such as a broomstick, for example. It's a very simplistic example, but you know, there's not a lot of taxability or taxability complexity to selling a broomstick. It's a tangible item. For the most part, it's going to be fully taxable as long as a company is not selling it to someone who or some company that would be exempt from sales tax. However, some companies sell things that have wide-ranging taxability complexity. So if you sell something like software, for example, that's what we do, or if you sell nutritional supplements, or if you sell medical devices, you're going to find that states are going to tax those differently. Using software as an example, we talk to a lot of companies that sell software as a service, and that's actually what our products are classified as well. California does not tax software as a service. However, if you have some type of maintenance contract or warranty or implementation service on the same invoice with that software as a service, the state of California will partially tax those services. So even the software itself, or even though the software itself is not taxable, the services related to it are. And then moving on to jurisdictional assignments. There are roughly 13,000 sales tax jurisdictions in the United States. It really depends on the state as to whether or not it's complex or more simplified. Massachusetts, for example, is a flat rate state for sales tax. So if you're selling into that state and you have the obligation to collect and file tax there, you'll find there's only one sales tax rate that you need to charge. However, the state of Texas has over 1,500 unique sales tax jurisdictions. There's all sorts of counties and cities and local or temporary or special taxing jurisdictions that can be in play for a particular transaction. And you've got to manage that. And you've got to keep all of those changes up to date, right? When one of these counties or cities or local jurisdictions, when they change their sales tax rate, maybe they bump it up by 0.5%, you've got to know that's going on. And you've got to upgrade that, or update that, I should say, in whatever platform you're using to invoice your customers. Number 4 is exemption certificates. Now, this won't apply to every company, but if you happen to sell your product to resellers, for example, or perhaps you sell your products and services to government entities or religious institutions or schools, for example, these are all types of sales tax exempt, potentially sales tax exempt customers. And let's say you're selling to a reseller. If they say, hey, we don't want you to charge us sales tax because we're going to resell these products we're purchasing from you, that's fine, but they should be able to prove to you that they're exempt from sales tax. So they should be providing you with a valid current exemption certificate that you would then keep on file. And that way, if you're audited by one of these states and they look at these invoices and say, hey, this is interesting, you sell a taxable product in the state, but you did not collect sales tax from this customer. You can say, yes, they're tax exempt, and then you'll have the documentation to prove that. And then finally, you've got to prepare and file sales tax returns, right? You might be a company that only has an obligation to collect and file in one state. So it may not be particularly a burden for you at this point. But due to some changes in 2018 and changes that will continue happening moving forward, you may find that you're going to have to start registering in additional states, collecting tax in those states, and then you'll have to prepare and file returns in those states as well. And as most of you probably already know, the states are going to assign you a filing schedule when you go through a registration process. So you may be a monthly filer in some states, you may be a quarterly filer in some other states. You might even be an annual filer in a state or two. And then finally, the last question that we're going to ask is, how prepared are you to be audited for sales tax purposes, right? If one of these states knocks on your door tomorrow, they're typically going to ask you things like, hey, we want to see all the transactions that you had last year in our state and what tax was calculated. They may also say, hey, we want to see the returns that have been filed with our state for the past couple of years. How readily available is that data that you could provide? And not only that, how accurate is it? So the whole point of this slide is to show that sales tax compliance, there's a lot more underneath the surface than just a standard calculation or a standard rate that you might have on a transaction. So let's dive a little bit deeper into specific challenges with sales tax. Now, as I already mentioned, it's actually 13,000 now in terms of unique tax jurisdictions in the U.S. Then there's also going to be some additional complexities. So if you look under exemptions, sometimes there are product and service exemptions from state to state, right? Some states do not tax certain items. You sell a medical device, one state may tax it, one state may not, for example. You also have customer-based exemptions. We talked about this a couple of minutes ago with exemption certificates, right? If you're selling to a government entity or you're selling to a reseller, they're going to need to provide documentation that proves why they're exempt from sales tax, and you've got to keep that on file in the event of an audit. And then taxability exemptions are going to vary by state, as I already said. So what are the key inputs of a transaction related to sales tax? Well, number one, you've got to know who you're selling to, right? Is this is it a B2B sale? Is it a B2C sale? Are you selling to a reseller? Have they presented you with an exemption certificate that's valid so that you don't charge them sales tax? When, right? You need to know the date and time of the transaction, and that can affect taxability. You may invoice a customer for a particular product today, and then you might turn right around 6 months from now and sell them the exact same product and deliver it to the exact same address. But there's a good chance that the sales tax that you charge today is going to be different from probably what you should charge 6 months from now. And that's because some of the jurisdictions in play at that address, meaning state rate, county rate, city rate, local rate, so on and so forth, may have changed over that time. That's the kind of accuracy that you've got to keep up to date in whatever platform that you're using to invoice your customers. And then finally, what are you selling them? Do you have an understanding of the taxability of the specific products and services that you sell, right? If you're a service-based company, meaning maybe you go on site to do repairs or installations for your customers, states are going to tax that type of service differently. As I said before, if you sell something like a medical device or you sell software, or you sell nutritional supplements, these are all things that may be taxed in one state, but then a neighboring state may only partially tax them. And then another neighboring state may not tax them at all. Let's talk specifically about product taxability, and this varies from state to state, and these are just a few of my favorite examples. You know, they're borderline comical in some cases, but it's very serious. You know, I mean, these states, these are actual examples in particular states. If you look at Colorado, for example, if you get in line at a fast food location and you're placing an order, this is a great example of taxability that's going to affect you in Colorado. When they're preparing a drink that you're purchasing in your order, the straw and the cup lid in that on that drink, those are taxable, but the cup itself is exempt from sales tax. Another good example is bagels in New York. And you know, we all love bagels, but if you order a bagel in a deli in New York, if you order that bagel to be sliced, there's a service involved in the eyes of the state of New York. So they're going to make that bagel taxable. If you don't have the bagel sliced, it's going to be exempt from sales tax because, again, they don't consider a service to be involved. And then finally, the candy bars in Indiana is particularly interesting. A Snickers bar is taxable in Indiana. Meanwhile, Kit Kats and Twix are not. Now, the reason for this is very unusual. It is only because of the order of certain ingredients in that candy bar. And because on a Snickers bar in Indiana, I believe it's flour in this case, because of the order in which flour is listed in the ingredients, it makes it taxable. But since it's later on, if you will, or presented later in the list of ingredients in a Kit Kat and Twix, it's not taxable. Why they decided to make this very unusual rule for candy bars in Indiana, I have no idea. But these are the kind of things that you have to know from product to product to make sure that you're compliant with sales tax. Let's talk about sourcing rules. Now, for the most part in the US, for interstate sales, meaning you're in one state, you sell into another state, the sales tax on that transaction is going to be based on the destination address. Now, again, if you're selling something into Massachusetts and you're a business outside of Massachusetts and you have to collect tax there, it's going to be pretty easy. There's one sales tax rate that you have to worry about. But in most states, there are a variety of sales tax jurisdictions, often hundreds of sales tax jurisdictions, and you're going to have to know which ones are in play at the address of your customer. However, that being said, there are some unique instances where origin-based rules are in play for sales taxes, typically for intrastate sales. So we'll take the state of Virginia, for example. If you're selling a tangible product in Virginia and your company is based in Virginia, then all of those sales that you make inside of Virginia, the sales tax is going to be based on the origin address of that product. So you don't have to know all of the jurisdictions in play for that particular customer's address. You need to know the rate that's in play for your address, the address of your brick and mortar location, for example. And you can see there's other states in play where they're origin-based for products, but they would be destination-based for services. There are some states where it's a mixed sourcing situation. So as you can see there in Texas, city and county jurisdictions are origin-based. However, the special taxing jurisdictions are destination-based, right? And again, this is applying to businesses that would be in Texas and selling to Texas customers. Let's talk about zip codes. Now, I would say that probably on close to half of the conversations that I have on a daily basis, when I ask, hey, how are you calculating tax? Are you making sure that the rates that you're charging your customers are accurate? A very common response is, yeah, we're good to go. We're using zip codes. So we think we've got it taken care of. It's pretty accurate. And if that's the case, or if you're using zip codes currently to determine your sales tax calculations, there's literally no way that that could be accurate. Well, with one exception. If you're using a zip code in the state of Massachusetts, I keep using this as an example, you'll probably be all right because there's one sales tax rate in that state. But think about a state like Texas, where, as I mentioned previously, there's roughly 1,500 unique sales tax jurisdictions. If you're using a zip code to essentially estimate sales tax in that state, there's no way to be accurate because there could be 40 or 50 different sales tax jurisdictions within one zip code. There's not a way to accurately account for the county, the city, and then any local, special, or temporary taxing jurisdictions that could be in play at a given time. As one of my colleagues likes to say very often, zip codes were created to deliver the mail. They were not created to calculate sales tax. So this is a great slide. This is an overhead view of a specific neighborhood in Commerce City, Colorado. And you will see that the houses that are highlighted in blue, for example, are subject to a sales tax of about 9.25%, about 9.5%. And you'll see that the houses in yellow or green, however it's coming across on your screen, they're subject to a sales tax of 4.75%, right? A little over 4.5%. Now, that's a delta of just about 5% in terms of sales tax. And we're talking about houses in one neighborhood in one city in Colorado that are, I don't know, 4 or 5 houses down the street from each other. So, you know, if you're using zip codes to calculate sales tax or to estimate sales tax, there's no way that you would catch this complexity. And there are other states in the U.S. This is using Colorado as an example, but there are states that have this level of complexity or worse, like California, Alabama, Louisiana, Florida, New York, Texas, all come to mind, right? But again, you know, I'm not really sure, you know, how the folks in yellow, you know, I wonder if when they were making their home purchase decision, if this came into play at all, right? The neighbor 4 or 5 houses up the street, you know, is going to be subject to a sales tax about 5% higher. So this is an example again of one neighborhood and one street in that neighborhood and how complex it can be. If you're shipping products, you need to be this accurate at this level in order to be completely compliant. So let's talk about Nexus for a little bit. Now, for decades really, the way that companies would create Nexus, and again, that's the obligation to go register, collect, and file sales tax in a particular state. The way companies would create Nexus would be through having typically a physical presence within a state's borders. Now, it could be things like a brick and mortar location, for example. If your company has remote employees in other states, if you have a significant amount of travel related to your company, maybe you have sales reps that travel, maybe you have folks that once you sell a product, they're going on site to actually implement or install something or do training with a customer. Maybe you have folks that go to trade shows all over the country, for example. These are all examples of a physical presence or a physical extension of your company. Other things that would be included in this list would be having inventory in a warehouse in another state. A lot of the folks we talk to on a regular basis will sell product through Amazon, and they'll be participating in the Amazon FBA program. What that means is you're sending all of the product to Amazon, and Amazon's going to fulfill those orders for you when an order is placed. Well, what that also allows Amazon to do is to store all of those products, which are your products, in their vast network of warehouses across the country. And they have warehouses in about 30 states. And that is something else that states consider to be a physical presence and a Nexus trigger. There's a few unique examples on here. So the first example at the top left, affiliates. So there's something interesting that some of you may have heard about previously called click-through Nexus. So if you do online sales currently and you happen to use another company to drive traffic to your website, so let's say you go to another company and say, hey, we'd love to put a link to our website on your page. And every time someone clicks on that link and they come over to our site and they make a purchase, we'll give you a commission on that. Well, what companies that are engaging in that activity don't realize is that in a lot of states, that activity actually creates Nexus. So if you're using that company to drive traffic, you've got to know where that company is based, and you probably, in all likelihood, have Nexus in the state of that company's location. There's all kinds of things that can trigger Nexus. It's very complex, but primarily to this point, or to last summer, I should say more correctly, it was more focused on where you have a physical presence. Let's talk about South Dakota versus Wayfair. And this is something that hopefully everyone on the call at least has heard about at a high level. But this is a Supreme Court ruling that came down last summer, June 21st of last year to be exact. And to give you some background on this, the state of South Dakota had gone to Wayfair numerous times over the past several years and then said, hey, there's no physical presence that you have in our state. There's no product that's necessarily being stored in our state. However, you do such high volumes of sales into our state that we want you to get registered. We think that that's a Nexus trigger. Wayfair, they didn't want to comply with that. So what ended up happening is the case made it all the way to the Supreme Court. And last summer, the Supreme Court ruled in favor of South Dakota. And what that has established is economic nexus. So up until last summer, again, you would be primarily concerned about where your company has a physical footprint, right? Employees, brick and mortar locations, inventory in a warehouse, things of that nature. Well, now it is constitutional for all of these states to say, hey, even if you don't have a physical presence within our borders, if you sell a certain dollar amount of your product or service, meaning total sales volume, or you have a certain number of unique orders or unique transactions that result in our state, you can potentially trigger Nexus that way as well. And again, that's why we're calling it economic Nexus. It has nothing to do with a physical presence. It's primarily based on sales volumes that you have in a particular state. Now you'll see on the right side of the screen there that there's a $100,000 threshold for total sales and then 200 unique transactions. Now, not every state has adopted these exact thresholds. There are a few outliers to this point, but for the most part, on average, the states have adopted the same thresholds as South Dakota. So $100,000 in total sales or a couple hundred unique transactions. Now, one thing that I hear pretty commonly is a lot of folks think that this ruling only applies to e-commerce. It only applies to online sales, and that is not the case. These states would look at total sales you have into that state through all platforms, so and online sales and offline sales. And to get more specific about that, the states are also varying in terms of, do they consider a taxable sale counting towards this threshold versus a non-taxable sale? Some states have been very specific and said it's only going to be applicable to retail taxable sales. Other states, like South Carolina comes to mind, have said everything counts. So if you're doing $100,000 worth of sales into South Carolina as a remote seller, and only $50 of that is actually a taxable sale, it doesn't matter. You're still crossing the total sales threshold, and they're going to want you to get registered. And again, let's talk about economic nexus a little bit. And I touched on this already, right? But it's a tax collection obligation that's imposed on sellers, and it's based on economic activity, right? It has nothing to do with, do you have an employee here? Do you have a brick and mortar location here? Do you attend trade shows in this state? Do you have inventory stored in a warehouse, right? It's all about, what are your total sales into the state? What's the number of transactions that you have resulting in the state? So what has happened since last summer? In short, many states have responded and have enacted economic nexus laws. You see a list of those states on the right, and you'll also see them on the map highlighted in blue. Now, this map is accurate as of November of last year. Since that time, there's actually a couple more states that have announced their threshold. So, for example, California and New York, now their laws, I don't believe are in effect yet. California has announced their thresholds, which you can find online, but the law itself does not go into effect until April of this year. But as you can see, many of the states are responding to the Supreme Court ruling, and they're passing economic nexus legislation, they're announcing thresholds, and the laws are going into effect. And we anticipate that as we progress into 2019, more and more of those states that you see highlighted in gray are going to start being highlighted in blue. And it'll be a lot more wide-ranging than it already is. And what it means for companies moving forward is you still have to know where you have a physical presence. The Supreme Court ruling did not get rid of physical presence nexus. It's still very much in play. So you need to know where these employees are, and this trade show attendance is, and where you have products, things of that nature. But what the Supreme Court ruling did is added this whole new layer of complexity, right? You've got to know where you have a physical presence, and now you need to start tracking your total sales by state, and you need to start understanding the number of transactions that you're having in these states as well, because all of these things can contribute to triggering nexus across the country. Let's talk about Amazon FBA for a minute. I touched on this briefly in the past. A lot of the companies we talk to pretty regularly will do online sales to their own website. They may have some stores where they are going to do some point of sale transactions within that store. But a lot of them are now selling through marketplaces. And there's no more well-known marketplace than Amazon. And if you sell through Amazon, you have the ability to let them fulfill the orders for you. So they'll have you send them all of your product, and then when these customers order through the Amazon platform, Amazon will fulfill the order for you. But what you have to be aware, if you're selling through FBA, is that they have warehouses in roughly 30 states at this point. And even though you may sell your product, you may ship your product to 1 or 2 or 3 locations, they can do whatever they like with the product once they have it. And in most cases, they will then move that product all over the place in their network of warehouses. And technically, where you have a product on the ground in an Amazon warehouse, you'll have nexus. So companies that are selling through FBA, you have to be aware of this. And there are ways that you can pull reports that will show you where you have product on the ground. And this is very likely where you've created a nexus for sales tax purposes. But it's even more complex for an Amazon seller, as you can imagine now, because not only do they need to know, hey, where's my product being stored by Amazon in this network of fulfillment centers, but they've also got to know all of the states where they have high sales volumes outside of where they have a physical presence, right? and that's related to the Supreme Court ruling South Dakota versus Wayfair. So, there's one side of it, where's the product being stored? That's physical presence nexus. And then in the states where they don't have a product being stored, if they're selling over $100,000 in total sales, or they have a couple hundred unique transactions, they very likely have nexus in those states as well. Now, this is something that's, I think it's from a Wakefield research project a couple years ago. And it's related to companies kind of making a decision on whether they should outsource tax compliance. And it was found that, these companies were asked, hey, if you were to be audited, how confident are you that there would be mistakes found? And about 3 out of 4 of the folks interviewed, or the folks asked this question, said, yeah, we're pretty confident that there would be mistakes involved in a sales tax audit. So let's talk about how we can help. As I touched on briefly, we're the industry leader in sales tax compliance via the cloud. And we can start really as early in the process as needed for these companies. So number one, there may be folks on the call, and there may be a lot of companies out there that are saying, I don't really understand where I have nexus, right? I know where I have brick and mortar locations, I know where my headquarters is, and I know where my satellite offices are, but we send sales reps all over the country. We send folks to trade shows. We go on site to visit our clients. Maybe we do some implementation or some consulting with them. Maybe you have products stored in a warehouse in another state. Maybe that's through Amazon, or maybe it's through another third-party fulfillment company that you're working with. We have a team in-house that can do professional nexus studies. So if you need someone to take a look at the activities that you're having in these states, whether it's a physical presence, or if you've crossed some of these economic thresholds in terms of total sales or number of transactions, that is a service that we offer. Once you know where you have nexus, then you know where you need to get registered. And that's also a service that we provide. So we can help you from state to state get registered. And then those states are going to assign you a filing schedule. So you know if you're going to file monthly there, or quarterly there, or annually there, for example. And then they're going to give you a sales tax ID. And once you have that sales tax ID from the Department of Revenue in that state, you're authorized to represent them. So you can start collecting sales tax in that state and filing a return, right? So we can help you determine nexus. Once you know where you have nexus, we can help you get registered in those states. We also have the ability to facilitate a business license as well. So if some of these states where you have sales tax obligations, you also need to register to do business, we can help with that. Finally, and this is more related to our software, we can calculate tax live in about 650 proprietary systems. And we can also prepare sales tax returns, file those returns with various states on time automatically, and then we can remit the tax that you've collected as well. So what we offer is a full outsource of the sales tax compliance process. We'll calculate all the tax, we'll prepare the returns, file the returns, and remit the tax. Let's talk about our tax engine, AvaTax. AvaTax is our core product, and it is what we'll integrate currently with QuickBooks Desktop, QuickBooks Online. If your QuickBooks Desktop is hosted either internally or through a third party, we can still integrate, that's no problem. But it can also integrate with hundreds of additional platforms. So folks that are selling online, if you're using a shopping cart, we can very likely calculate tax in whatever cart you're using. If you've got an ERP on the back end or a CRM system like Salesforce, or if you have an inventory management system like Fishbowl, wherever you are processing transactions or generating invoices or having customers check out online, you very likely have an integration and we can calculate tax. And the example on the screen in front of you is using QuickBooks. It's using a QuickBooks invoice. But I want to walk through kind of how simple it is really to use AvaTax. Our plugin, if you will, is available for QuickBooks Desktop, like the example you see here. Once it's installed, and that only takes a few minutes to do, you are then able to set up a profile within our software where you tell us the states where you're currently registered, and you would also give us a sense of the different types of products that you sell. Now, if you sell something like a broomstick, like I used in the earlier example, there's not a lot of complexity there. You can tell our product that you're selling tangible property, and we'll tax it accordingly. It's usually going to be fully taxable, unless, of course, as I mentioned earlier, you're selling it to someone who's exempt from sales tax. But in the event you sell software or services or medical devices, things of that nature, we have tax codes that represent a wide range of those types of products and services. And you can actually map the different SKUs you have in your item master in QuickBooks to our tax codes. And that's how we know what's on an invoice. And what will happen is when you process an invoice or create a new invoice for one of your customers, we're going to look at a couple things. Number one, we look at the destination address on that invoice. And if that address falls in one of the states where you've told our software that you're currently registered and you have to collect and file, then we're going to do a live tax calculation. It takes about 0.2 of a second to return the tax to the invoice. We also, as I mentioned, have the ability to do product and service taxability. So we're going to look at the different line items that you have on that invoice. And let's say that you are selling software as a service, for example, and you are selling it to a customer in California. So you have that as a line item, your software as a service with a subscription to your software. However, maybe line item 2 is going to be a maintenance contract related to that software. For line item 3, maybe it's an implementation fee or support fee for that software. So the software as a service piece will not be taxable, and that's what our software is going to determine in an instant. But it will also know that those services related to the software are partially taxable. So in 0.2 of a second on every one of these invoices, we're isolating the jurisdictions in play, meaning we will know that at that address in California, there's a state rate, county rate, city rate, local rate, temporary rate, whatever's in play. But we'll also know if your products and services are taxable there. This is an example of the over 600 different integrations that we currently have. As I mentioned previously, a lot of CRM platforms, ERPs, shopping carts, folks who are selling online, ERPs, point of sale systems. And I want to touch for a moment on the return side of things. We talked briefly about how we can calculate tax. It's very accurate. It accounts for all the jurisdictions in play, determines the taxability of your products and services. Well, at the end of the month or end of the quarter, we can also prepare sales tax returns for you. We can file those returns with the various states on time automatically, and then we can remit the tax that you have collected as well. So it's a full outsource. And you can think of our software as essentially an audit repository at that point. Now, if one of these states knocks on your door a couple of years from now, hopefully it doesn't happen. But if they do, if they decide to audit you, some of the things they're going to ask you for is transactional data. They're going to say, hey, we need to see every transaction you've had for this amount of time, and we want to see the tax that was calculated. And we also want to see all the returns that you filed for a specific amount of time. That is the kind of data that's typically hard for companies to find quickly, and it's what usually makes an audit long and arduous, right? If you're using our software, that's information you can provide them in a matter of seconds. We find that our customers who do unfortunately have to go through audits, if that happens, it's usually a quick and more seamless process because of how readily available and how accurate the data is. Here's another list of different platforms that we integrate into. So let's talk about a few steps to reducing risk. And I won't read through this word to word, but moving forward, the things that you need to be aware of if your company is going to stay compliant or get compliant with sales tax is number one, you have to know where you have nexus, right? And again, that's something that we can help with, but it's something you should discuss internally. Where do we have employees? Where do we have brick and mortar locations? Where do we have folks that are going to trade shows? Where do we have folks that are going on site to visit with our clients? And now, thanks to the Wayfair or the South Dakota versus Wayfair decision, you have to look at your total sales thresholds. Are you selling over $100,000 into a number of states where you're not currently registered? Are you selling, or do you have more than 100 or 200 unique transactions that are resulting in states where you're not currently registered? If the answer to those questions is yes, then you very likely have additional states where you have the obligation to be collecting tax, sales tax, and remitting sales tax. The second thing I would encourage you to do is ensure that the platforms that you're using to calculate sales tax currently, are they doing it accurately, right? Are you confident that in every one of these transactions you have into a state like California or Texas or Florida or New York, that all of the jurisdictions are being accounted for properly, right? If there's a state rate, if there's a county rate, a city rate, local rate, temporary taxing jurisdiction, I'll talk about an example of what I mean by a temporary taxing jurisdiction for a moment, since we have a couple minutes to spare here. The city of Atlanta, a couple years ago, built a nice new stadium for the Atlanta Braves, the baseball team there. And part of the way that they paid for that is they instituted a temporary taxing jurisdiction in certain areas of the city of Atlanta. And things like that happen all the time. And those are the types of things that you have to be aware of, and you have to make sure that whatever process you're using to calculate sales tax is able to keep track of those types of changes. And our software is. And finally, I would just say, make sure that everyone's on the same page, at your company. It's very important moving forward, specifically with these changes to Nexus, that companies are aware of where they need to get registered. And they're aware of how their products are being taxed or how they should be taxed, right? Again, if you sell a tangible item, there may not be a lot of complexity to it. But if you're a service-based company or you sell software or even certain types of tangible products like a nutritional supplement, the taxability of those different types of products and services, it varies greatly from state to state. So we want to make sure that that's being done properly. And again, that's another way that our software can help. So that concludes the presentation that I had today. I'd love to hear if there's any additional questions or comments on the presentation or anything that you have related to sales tax compliance at a high level. More than happy to field those questions or comments, and I'll hand it back over to you, Jennifer.
Thanks so much, Mark. We did have a couple questions that came in as you were going through, but again, if anyone does have any, feel free to type those over to us right now. One question we had is, does Avalara help with sales tax audits?
Do we help with sales tax audits? So we don't provide direct audit support, right? So we're not going to actually come on site and kind of work through an auditor directly with you, or an audit directly with you and the auditor. So not directly. Now the software itself typically will make an audit go by a lot more smoothly and in a lot more streamlined process because of how readily available the data is and how easily it is to access. Now that said, we do have a lot of great partners that can actually do on-site audit support. So if that was ever needed, we could certainly facilitate a conversation.
Great, thank you. Another question we have, you showed an illustration of all the different other companies and apps and whatnot that Avalara can integrate with, but do you integrate with eBay or PayPal?
Yeah, great question. So there are a number of marketplaces out there, for example, like eBay and Walmart, for example, Etsy, even Amazon, and then there's some payment processors like PayPal. Now, all of those platforms that I have mentioned, we don't have a direct integration for Avatax. So what that means is we can't calculate tax in a live environment for, say, eBay or for PayPal or for Etsy, for example, and there's some others like that as well. However, in the event that we can't calculate tax live, we still have a filing-only solution. So I didn't touch on that in this presentation, but we have something, and you can find more information about this on our website as well, called TrustFile. That is a prep and filing tool only, and it is very helpful for marketplace sellers, for example, where they may be using Amazon and Etsy and eBay, and Amazon, for example, can calculate tax on transactions. But what TrustFile is going to do is at the end of the month or end of the quarter, it's going to gather all of that information, all those transactions and the tax that was calculated. It'll prepare the returns and automatically file those returns. So there's one of two ways you can go. Potentially, we can calculate tax live as long as we can integrate with that particular platform. If we can't integrate to calculate the tax, we can still offer a solution on the back end to help automate the filings.
Excellent. Thank you so much. Those were actually the only two questions that came in. So if you want to wrap it up, if there's any other questions, again, go ahead and type those over to us. Actually, one just came in. The question we have is, we're in Virginia, so origin-based state. Do we only need to charge our customers 5.3% sales tax and not the sales tax in the different locations?
Yeah, so I'll throw the caveat out here, right? I'm not a CPA or a tax attorney. I really can't give you specific tax advice and say, hey, this is exactly the rate that you should be charging. But at a high level, I do know that Virginia is an origin-based state for tangible products. So I would highly recommend that you talk to a CPA about that, or a tax attorney, someone who can actually give you tax advice if you want a specific answer. But very likely, if all you're selling in Virginia is tangible property, then the tax will be based on the origin address, or it should be, and not the destination address. But what you'd want to think about is, if you are based in Virginia, are you making any out-of-state sales? And you would then want to look at those thresholds related to the Wayfair decision. So if you're doing over $100,000 into another state, or you have a couple hundred transactions, you'd want to consider getting registered in those states as well. You also would want to look at whether or not you have a physical presence outside of that state, and you may not. But if you have reps going out of the state, or you go to trade shows out of the state, or you have inventory in another state, that can potentially be a nexus trigger as well.
Great, thank you so much. All right, well, I think that covers all the questions that we've had come in. This session is being recorded and will be posted on the Out of the Box Technology site later today. So if anyone wants to go back and rewatch any portion of it, feel free to do that. If you have any questions, you can reach out to myself. You can use the live chat on our site, or reach out to Avalara directly for some information, and we can help make that connection as well. So Mark, I'll let you wrap it up, and then I have a couple closing things to talk about.
Excellent, and thank you, Jennifer, and we want to thank everyone at Out of the Box for having us today. And we want to thank everyone who joined the call, and I hope the presentation was beneficial. If there's any additional questions related to sales tax compliance, please reach out to us. We're more than happy to help. But again, thanks to everyone, and thank you, Jennifer, for having us today.
Absolutely, thank you. So I'm going to go ahead and share my screen here. What I wanted to talk to everybody about is our upcoming Technology Tuesdays. So again, thank you for joining us today. We have Technology Tuesdays every Tuesday, which we're really excited about this year. We'll be back next week, and we'll be talking about some Recur 360 quarterly updates, what's new with Recur 360 in the last couple of months. Again, this app is a recurring invoicing, billing, and payment solution, and we're always modifying it depending on what the users need, what you guys are saying. So join us for that if you want to learn more about Recur 360 or what's new. And we'll also have T-Sheets and Locate with us next month. So we're really excited to welcome those partners as well. So again, you can register for free at our website, and that link will be emailed to you later today as well. So again, on behalf of everyone here at Out of the Box Technology, I want to thank Mark for joining us today from Avalara, and everyone who is on the line. We hope you enjoyed, and we hope to see you again soon.